everybody. Marilyn Wilson here from RE Technology. I've got two of my fun friends with me today, Cindy Schmier and Brian Bushlach. They're going to talk to us about a little different topic than what we normally talk about at RE Technology, but this is something that we all need. I think we all struggle with. We all feel like we pay too much money for it and don't get enough value. So Brian's built some stuff here he's gonna show us, and Cindy's gonna tell you from a realtor's perspective why she made the switch and why it seems to be working out great for her. So anyway, so we're going to talk about health insurance today. You know, in these times of COVID, it's probably a topic that's a lot more top of mind for all of us, and especially if you've got, you know, children, if you've got lots of people on your plan, if you feel like you're the one responsible for your family, which I know many of us do, it's an important topic. So Brian's come up with some really neat stuff here. Let me just introduce everybody real quick, and then we're going to just get into the topic because I know it's something that you guys need. So if we can flip to the next slide. So I'm Marilyn. I think if you've been on RE Technology webinars, you've probably met me before. I'm the president of RE Technology and also the managing partner of Wave Group, a consulting firm that works with brokers and agents and technology companies and all kinds of fun folks. And then we've got Cindy Schmier. She is the realtor at Berkshire Hathaway Home Services and Metro Realty in Wisconsin. And she's, I think, very much like many of us. We're getting a hi from Pompano Beach. Hey, German, nice to see you. And hey, Lou. And then Brian Bushlach, he's going to tell us, I think, a very relatable real-world story about how he got into this. Kind of, I don't want to say by accident, Brian, but kind of, right? Kind of by necessity. So he's the founder and CEO of Uity, which is a Seattle-based insurance company that has, well, he does a lot of interesting things you'll hear in a minute. But he has found a way for us to get national coverage as realtors, which is really exciting, and with some really smart ways of doing it, a little different than what we normally see from insurance. So with that, I want to turn it over to you, Brian. Jump in and tell us what we're doing here and why this is an important topic for us to all think about.
Yeah, well, thanks for the big time intro there. I appreciate that. And when Glenn reached out this summer and invited me on, I was flattered. So I want to thank you for the time. I want to thank Cindy as well. She's been very gracious with her time, and looking forward to her sharing her insight here. And yeah, I've been in real estate or around real estate for 20 plus years. I go back as a lender. I'm now a licensed broker in the state of Washington. Do a lot of marketing with real estate groups, title insurance companies. So also have that overlay of the insurance piece too. And so, you know, our family has lived this. We've seen our premiums, or we saw, I can now say in past tense, our premiums more than doubled in about a 4-year period. And we actually went without insurance for a year. And I know many of you either have done that or are doing the same thing. So quite honestly, if you'd have told me I'd be standing here with a health insurance plan a couple of years ago, I'd have said you're crazy, right? But for us, we had to figure this out. So I think, you know, I came at it from a completely different perspective than professionals inside the insurance industry. And I think that's what you had to do, was kind of look at it outside the box and try to figure this out. And believe me, there were many times where I almost quit because it is a convoluted, confusing, crazy business. If you think the real estate business is crazy, and it is, I know we're all super busy, so I appreciate you taking time. The health insurance business is even more so. Want to invite you to participate. I know many of you attend these events regularly, but if you don't, look at the screen here and you can simply text us your questions. And Marilyn, you may have some guidance here, but you'll filter these questions as we go through this, right? And give us some feedback.
I'm muted, sorry. Yeah, if you just go into the little section, there's the blue bar that says questions, there's a little gray triangle, click on that, open it up. And I'm watching it regularly, so if you guys have, anytime you have a question, just throw it in there. And if it's for Brian or Cindy or me, we're happy to answer it, because we really want this to work for you. This whole point of these sessions is to make sure that you're getting what you need. So feel free to participate, and we'll be happy to help.
Awesome.
Go for it, Brian.
Thank you. Well, you know, we're all here because obviously health insurance coverage is expensive. There's no question about that. It doesn't matter where you live around the country, we're all experiencing that. Having lived this myself, being self-employed for over 20 years, cash flow is always a major concern. And when your premiums double or triple in a 2 or 3 year period, and maybe your business doesn't, that's obviously a concern as well. We've found in launching this over the last 6 months that about 30% of the people we talk to in real estate have no health insurance coverage, and this is all ages. Some folks in my age group in their 50s are simply going without because either they can't afford it or they're concerned about the monthly premium. So that's a big issue. The other thing I found, which really shocked me, was about 1 in 3 people in real estate currently subscribe to what is a supplemental plan. So sort of an AFLAC type of plan where if a specific issue happens or there's a specific incident it will cover, and then that's it, right? And these things aren't cheap. So we wanted to address that. What was really interesting to me in researching this over the past 2 years before we ever really had anything that we could bring to market was the fact that we're paying huge premiums, and most of us, about 80% of the market, hardly uses their health insurance. So we're insuring for something major that may happen, or even, that emergency room visit. This statistic jumped out at me. $1,400 is the average out of pocket on an annual basis. So, for me, when I'll tell you, our family was paying close to $25,000 a year for health insurance, I said enough. I'm going to self-insure. And that was the point where I learned a lot, because I'd go to the doctor for, something basic, and rather than a $500 charge, I'm paying cash, so it was $150. And I'm sure many of you who have gone without have experienced that same thing. I share that because that's what really piqued my interest was, what's the deal here? Why is it so much more cost effective? And it turns out that the clinics, the doctors all around the country that I talk to, they struggle to get paid. Okay, so typically they're not getting paid for 90 to 120 days, which is a huge driver in driving up the cost. They also have to chase us for deductibles. So those are really the major issues behind the scenes that I don't think very many people talk about. So that was a pretty important thing for us to address. And I know, Cindy, I want to bring you in because we first met, I think, back in April or May when we were first launching this. And I know when you came to us, it was a lot of these same concerns, right?
Yes, that was the concern, was just the cost of my premium. I'm a sole proprietor individual, no family, no dependents, and my premium had skyrocketed to close to $900 a month with I believe it was a $5,500 or $7,500 deductible. So basically only catastrophic care.
I want to ask the audience, how many of you feel like you're in that predicament? Either you don't have insurance. I just already heard from one gentleman that told me he doesn't. That's why he's here today. But either you don't have insurance, or you feel like you're paying way too much and you're not getting your money's worth. So just let me know how many of that. Just say yes if type it in the question, yes, that you feel that way. Honestly, I bet a lot of you are like that today. Oh yeah, a whole bunch of people. Lisa, Jamie, Trevor, Lisa, Pete, Rachel, Christine, Alyssa, Kirk, and it goes on and on and on. So yes, that's why everybody's here today. Oh, and then there's someone that's on Cobra. That's a whole other nightmare. That's about to run out. And he's like, now what do I do? Because that thing is not great, but it does get you through a few months sometimes, but that's about to run out. Now what do I do? So everyone on the call is suffering from one of those two things, it looks like.
Yeah, well, I'll tell you the other thing that's been an issue with health insurance is on the brokerage side and getting distribution. So just a quick overview of the markets. Insurance, as you know, with title insurance, is regulated on a state-by-state basis. And the same is true in health insurance. So some states are much more stringent than others, but it makes it very difficult. Kudos to NAR for providing health insurance plans. But, as Cindy told me, they're pretty much the same price, the same cost, the same premium as plans you would get on a state exchange, those bronze, silver, and gold plans. So what really hasn't been addressed was the cost piece. We have access, but it's still so expensive. And for the brokerages, so when you look at setting up a group in the traditional health insurance world, there's a ton of liability. So for those of you out there on this webinar who are owners, managers, decision makers, brokerage folks, we've addressed a lot of that because those were huge barriers to obtaining health insurance. Because quite frankly, if one of your agents doesn't pay a premium, you would be on the hook for it. And if you didn't pay that and make up the difference, then everybody loses their coverage. Well, I knew that we couldn't do that in real estate, obviously, with fluctuating cash flows, et cetera. But this is a huge tool. Obviously, if you obtain this insurance, certainly a great opportunity to recruit top agents. And one thing I hear from a lot of brokers is just retaining their staff, the admins, the people that support us and what we do. So important. I mean, how many times have you lost a great key admin to, another job? In the Seattle area, we lose a lot of people to Amazon. So that's what happens because simply you don't have health insurance. So we've solved that. I mentioned liability, and with our plans, there is no liability at the brokerage level, and we'll talk more about that in a sec. We've eliminated the admin too. So to sign up for this coverage, you simply fill out a one-page request for coverage form, provide us a roster of eligible participants, and fill out an ACH form. And that's not so we can take money from you, it's so we can give you money back because we collect all the premium. So you don't have to worry about that every month, chasing people down for premium dollars, or did a deal close? Do they have the money? Do you have to get a check for them? Forget about all of that. We have our own direct billing. We collect all the premium, and then we remit that back to you as a lump sum at the end of the month, and you make the payment. By the way, if we're short on that, you just note that to the carrier, and they'll figure it out and get in touch with the person who didn't pay. So we've simplified a lot of that. So the payment thing was obviously huge in figuring that piece out, and that's been a big driver for us. So how did we do it? How did I do it? As I mentioned, almost gave up a few times, and we almost brought this to market last fall. And I'll give you some backstory here real quick. These plans actually originated in the restaurant industry about 30 years ago, so they've been around for a long time. And with the repeal of the ACA, the Affordable Care Act, in 2017, it's a little easier to get access to these plans than it was just a few years ago, when if you did not have a qualifying plan, you would be fined by the IRS. Well, that's been repealed. So I know there's a lot of question about that. That is no longer the case. So that opens up the door for some more options. And I think this is one that certainly works for our industry. So these plans are proprietary. Proud to say, after all the blood, sweat, and tears, they're exclusive through our brokerage and our carrier. We just got word late yesterday that we now have approval to offer these directly to real estate associations around the country, state by state. We're licensed in 43 states. The association model will work in about 36 of those 43, so that's great news. We already have some associations reaching out to us, but this will allow us to push these plans out to the association at the local or regional level, and then allow you, if you're a member, to access that coverage and pay for it directly to us through that group. So a huge, huge deal yesterday for all of us, just in time for open enrollment. Individual coverage, I know you're probably looking at that and going, is that a typo? It's not. That's an individual coverage plan that starts at $105 a month. I'll be real honest with you. It's super duper basic. I mean, there's not a whole lot in that plan. It goes all the way up into a couple $100, in fact, $360 for plan 4, but we've got 4 plan coverage levels. So what I wanted to do with this was give you the option to pick a plan level that works for you, not try to put the square peg in the round hole, which is what happens on the state exchanges most often. So we've given you a lot of options. We've covered families, individuals, single parents, you name it, we've got it covered. How did we do this? So I mentioned the issue of payment. So what we did is manage the cost by managing the benefit. Pretty simple, but the old school model that we're so used to of deductibles, and you still have caps on coverage in that model. You may have a major issue in a $10,000 deductible, yet you've paid $10,000 in premiums throughout the year. So I wanted to get rid of that. So what we've done is flip the script completely on that now, and we manage the cost by managing the benefits, and you'll see that within these plans. 80% of our claims are paid within 30 days or less. This is huge, and I know Cindy can speak to this because when you switch to a new plan, you're always concerned about, is this prescription going to go through? Is this coverage actually going to work? And I know, Cindy, you had that feeling, I know, right? The first time you went in to get a prescription, right?
Right. I was kind of nervous because I'd never heard of this company before. I did do research, so I knew they were a viable company. But when I went to the pharmacist to pick up a prescription, I just handed them my new card and they put it in, and I paid $10. And they didn't question anything. It worked well, and I was very relieved. I also went into the doctor's office, not really for a visit, but to get a flu shot. And they did the same thing. They asked me if I had updated insurance. Oh, sorry about that. I gave them the card, and they put it in, and no problems, no questions asked.
Well, that's
so
great.
Brian, we're getting a couple of questions from the audience.
Yeah.
People are asking, is this only offered through brokerages, or as an individual, can I purchase the plan?
That will depend. That's a great question. And as I mentioned, we're now available at the association level. So I would really, encourage everyone. This is what happened with Cindy. Cindy heard about our plans word of mouth. I think NAR put out we were featured in another publication, and then NAR picked it up. I think that's where Cindy saw us.
Yeah, I saw it in the Realtors magazine a few months ago.
Okay, great. Yeah, and unsolicited, and so appreciate those referrals. And then she took it to her broker, Dana Witkowski, and the rest is history. That's how we implemented that. So we haven't done a major national multi-million-dollar advertising campaign. It's all been referral and word of mouth to this point. So if this is something that agrees with you and you like it, I appreciate that. And if you take it to the head of your association, your brokerage or franchise owner, whoever's in a position to help us place the coverage. If it's at the brokerage level, we need a minimum of 5 people in your office in the group to form a group. And if it's at the association level, in most cases, we have so many people that that's not an issue. So either one of those is now an option for us to place coverage. But so great question. Thank you for that. The big thing for us is the claims payments. And, when you go to providers and they see our card, they kind of smile because they know they're going to get paid. Okay, 80% of the claims are paid within 30 days. That helps drive down the cost because a provider knows that, if they charge $500 for an MRI with another plan, it may take them 90 days, 120 days to get paid. With our plan, they're going to get paid right away. That saves them time and money. We've also eliminated deductibles. This was big for me because we had some stuff happen on a major medical plan and found out that, oh, by the way, it's a $5,000 deductible. Oh, and then, if something happens to another individual, it's another $5,000, and we've all been there. So I'm not a big fan of deductibles, and as it turns out, neither are the providers, because this is one more thing they have to chase us for and hope that if something happens to us and we have a $500 or a $5,000 deductible, that we can pay it, right? So you see the formula here. They don't know if or when they're going to get paid. What does that do? That drives up the cost for everybody, not to mention the fact we're trying to insure everybody, and a lot of people can't pay for that. So that's the overarching issue you might see on the news. But when it comes right down to it, what nobody's talking about, you heard it here first, is this payment thing is huge. In fact, I talked to a urgent care doc in Houston a couple of weeks ago, and they have actually gone to a model very similar to ours where, hey, cash payment X, and they put that right out front. If you're on, insurance coverage, here's what it's going to cost you. So that's a big deal in our plan. So it's called first dollar coverage. So that means we're picking it up from the very first dollar. Now, that's not to say there's not a copay. There's a $10 copay, as Cindy mentioned, for prescriptions, doctor visits, $10 copay, but that's it. We cap it there, so that helps control costs. So the biggest thing too is that just drove me nuts was, these health plans, what's covered, what's not covered, what happens if ... right? So in our plans, we code the payment for what's covered literally line by line. So if you're, kind of a geek like that and want to go through it, you're more than welcome to. But it's very easy to see what's covered and what's not. And I'll talk more about customer service in a second, but if you have any questions, our carrier, and I'll get to them in a sec, they've been phenomenal from a customer service standpoint.
We've got a ton of questions. You've got a lot of people excited about this. So it sounds like we've got lots of different types of folks on the call. Amy sounds like she's from one of the technology companies that we also work with at RE Technology. Said, can I get in on the action? She didn't say it that way. I said it that way. But is it possible? Do you actually have to be a real estate professional, or can you be related to the real estate industry to participate?
Well, that's a great question, because we have appraisers and title folks and a lot of people in our industry, a great industry drives our economy, right? So yes, to a certain point. So what we've done with these plans is they are specifically built for 1099. So they're not built for employee W-2 relationships.
Gotcha.
I had somebody reach out to me who had like 50 something employees, and I was like, that's, you're kind of stuck right there. You do have to provide minimum essential care and all that. So not to go down that road, but yes. So what's happened, I'll share an example with you, is that in some of the smaller title agents in Florida, as you may know, those are small mom and pop shops of maybe it's an attorney closed state, or it's, a small title company with 3 to 5 people, and they struggle to get enough people to start their plan with 5 participants. And so we add appraisers, notaries. Our carrier here, Turnian, is not going to audit that. Okay, they're not, as long as it's in the profession, they're okay with that. That's a different plan than our realtor plan, but very similar. And we've certainly had, lenders reach out, others reach out. So I think that, it's a wonderful question, because, and I get excited, I get kind of emotional actually, because I've lived this last couple of years thinking, can we do this? Can we do this, right? If you're an entrepreneur, which you are in real estate, you know that feeling, right? And here we are, where it's been so well received, and we get these questions, which I appreciate so much. So yeah, I think that this model for health insurance is something that I think could be the future model for a lot of people beyond real estate. So we'll see. Our carrier is Axis Capital, and they are not a household name, and I'll tell you why. They don't spend $1 zillion on advertising like the other folks out there do. Their subsidiary, Turnian, is based in Scottsdale. This company is a $25 billion insurance and reinsurance company. They've been around for, 30 years in this space. They were the ones who pioneered this type of coverage in the early 1990s for the restaurant industry. So next time you go to, if you stop in Pizza Hut or Domino's, this is probably kind of the same thing they've used. Their different model, different platform, but that's where this came from. So it's not like we just, invented this or, pulled it out of a hat. It's been around, but we underwrote it specifically for real estate and added a lot of bells and whistles to it. So our health network is a PPO, and I promised I wouldn't use acronyms, but I think most of us here know it's a provider network. This is a national network, and every time I say this, Marilyn's probably tired of hearing me say it, but knock on wood, we have not had anyone yet who is not in our network, okay? And we stretch now from, we've got agents on Cape Cod off Massachusetts all the way to the California coast and everywhere in between, brokerages, I should say, and title agents. So far, this has been great, and it's a huge network, and it's a well-known network. So we've been very thankful for that. So a big name there. Teledoc, and we were putting this together, hey, had no idea what would happen this year, and Teledoc has grown exponentially. This is now the first stop for many people who unfortunately have the coronavirus, is to call a doctor and talk through it and determine what the next course of action is. So we have that as part of our plan, no extra charge there. And our prescription network is RX Sense, again, a national network, as Cindy mentioned, very reliable. We've heard nothing but good things. And as Cindy mentioned, I talked to a lot of people, follow up and make sure they are happy with what we're doing. So that's our lineup there, and that's important. A lot of people want to know the who's who. If you like a brand name, well, you're going to pay for it. Okay, so kind of an overview of these plans. We'll get into them a little bit here, and I'll break after this slide to see if there's any more questions. But these plans are guaranteed issue, which means we can't turn you down. Now, we can black out pre-existing conditions, and we have to do that for many reasons. It depends on the pre-existing condition. In some cases, I've learned a lot about this over the last year. It can be a prescription you're taking. It can be a doctor visit you had that can, reset that clock. That's something you can call access attorney and to find out, specifically if you're blacked out on that. But these are guaranteed issue. There's no medical underwriting. The same premiums for the 52-year-old guy here as the 32-year-old guy and his family. It doesn't matter. It's the same in all states. So that also is huge. We provide inpatient and outpatient care, emergency care, 4 plan levels. These mirror major medical. They are not the Cadillac major medicals you're used to, but they mirror them. 4 plan levels, so you can pick and choose how much coverage you want or don't want. 4 corresponding prescription plans. We also have dental. The dental plan I like. I was paying cash for a long time. I know a lot of you do too. This is $1,000 a year benefit. Essentially, if you're an individual, for about $330 in premium. So pretty good value there. You can add vision, you can add life insurance. The mental health counseling is, anyone who has dealt with this, as our family has over the past few years, very important. We've got that in there at no extra charge. And if you were to contract the coronavirus, plans 3 and 4 particularly have plenty of benefit there to take care of you. Plans 1 and 2, probably not as much, but when you see the value here and the price tag, which I know you're probably excited to see, you'll see what I'm talking about. Any questions?
We have a ton of questions, so let me run through a few of them for you. So Darla asks, are pre-existing conditions not covered, or are they okay with this? Are they covered?
They're covered after, depending on the pre-existing condition, they are covered after a blackout period of up to 12 months. So again, it just depends on what your pre-existing condition is. So what we'd want to do is get you in touch with attorney and customer service, walk through that, talk through that with them, find out, what's going on there, and, figure out how long you would be in a blackout period. The unfortunate thing with these plans, and I'm the first to admit it, is we can't be all things to all people. Kind of a sad story with an agent in Cleveland who, her premiums are $2,600 a month. And she had a ton of health issues. God bless her. She, was crying when she came to me and via Zoom and, said, hey, can you help me? And we could. We were able to offer her benefits on our plan. There were some blackouts for some pre-existing conditions. The problem we ran into was that she would exhaust her benefits very quickly. Cleveland Clinic, as you may know, is one of the top. It's a Mayo Clinic type facility, and it's very expensive. So that will bring up the topic of kind of shopping around for coverage, which I think we should all do more. But unfortunately, we can't be all things to all people. So there will be some folks who this does not work for, and I want to be 100% transparent about that. But great question.
Anthony wants to know, does it cover durable medical equipment and prosthetics?
That's a good question. I don't know the answer to that. So I will check with our attorney and rep. If you'll contact me at info@youity.com, youity.com, I will follow up on that by the end of the day. I believe there is some coverage for that, but I'll check with our rep.
Okay, there's a couple of questions from a broker perspective. I'm a broker working alone. I'm not clear. Can I get coverage for my family? And then there's another one that's actually a W-2 structure in their brokerage. Can they get coverage?
Good question. So first one first, we would need 5 participants, not 5 people. So that would be a scenario where if you had yourself as an independent broker, I know that's the case many times in the state of Oregon, you could set up and bring in an appraiser or 2, a notary or 2, so that we had the minimum 5 to build your group. So there is a workaround for that. And I already forgot the second question, Marilyn.
The second question was, what about brokers who are S corps, meaning we pull a salary and receive a W-2? Can they participate in this?
S corp should be fine. That's a new question, so thank you for that. We would look at that again as self-employed. You're pulling the W-2, but we're going to issue the coverage to the group, the S corp. So again, what you would need is the minimum people in that group. So as long as we've got enough folks to have the minimum 5, and we're not going to exceed 50 who are, true W-2 employees where you've got compliance and IRS issues, we should be fine.
Gotcha. Trevor has, I think, an important question, and I think we're going to cover this later, but it doesn't hurt to repeat it. Cindy and I talked about this on our prep call. Are these plans honored at top tier hospitals, and how wide is the hospital doctor network? I think that's a really important, we all want to know that, right? We don't want to have to get insurance and then switch a doctor that we already feel comfortable with.
Yeah, boy, that is a great question. Cindy can help us on that one too, because I know when we talked prior to the webinar, I know she, and this was great. This is what's great about Cindy. That's why I asked her to be on the call. I knew that she had done all the homework, but you looked into this, right, Cindy?
Yes, I'm in the Milwaukee, Wisconsin area, and we have 5 major health providers groups. I'm not real sure on the terminology, but it's Aurora, ProHealth, Freighter, Essentia, and there's another one I can't think of. But I looked into all of them. I checked my doctor, I checked all the hospitals, and then I went ahead because I just wanted to know in case I decided to change doctors for some reason, if the other hospitals were covered, all the major hospitals that I could think of in Southeast Wisconsin. And then I went even and checked a few others just out of curiosity. They were all covered. All my doctors were, all my kids' doctors who are all adults with their own families and other insurance. But I just really wanted to make sure that this was a viable insurance coverage, that I would have coverage no matter where I went. And everyone I checked was covered under the PPO.
That's awesome.
Yeah,
okay.
That was the big thing for us, in rolling this out. It was in the spring. I got the question, is the Nantucket Cottage Hospital in the network? And I'm thinking, oh, geez, this is going to be the one, this is going to be it, sure enough. And, I hear back, yeah, they're in network. And so I got, 400 agents on Nantucket Island that were, okay, great, party time. So,
that's
kind of
awesome. So. Here's, I think, a question that probably a lot of folks in real estate have too is there any good rates for older people? My husband and I are 63 years old. So we were talking about that. Every time you pass an age decade, not only do you get sad yourself because you're older, then your insurance company comes and gigs you with another big boost in insurance costs. So how does this work if you're 60 plus? Because let's face it, many of us in real estate are 60 plus. So how does it work?
I'll let
I can answer that. When I turned 60, my premium went from $500 or $600 to, it was like $895.
Wow.
So with this plan, my premium is $3 something. So I was saving close to, I know it was, do the math, it's about $500 a month. So for me, that premium was crucial. And it was one of the major reasons I kept looking into this. My feedback from my real estate friends is, I might not should go here yet, but is if it's too good to be true, it probably is. But I found that's why I did so much research, just really checking everything that Brian's plan showed. I went back and checked it, made phone calls, because I was one of those that was a little skeptical that, wow, if I'm going to save $400 or $500 a month, there must be something wrong here. But so far, it's been great.
Yeah, and that's a great point. And, I should jump in on and follow up what you said is that, that's what I tell people. If it's too good to be true, it probably is. And, quite frankly, these plans aren't for everybody. If, I mentioned the story of our friend who had to go to the Cleveland Clinic. And, if you have major medical problems, ongoing family history, you're dealing with stuff, I don't recommend these plans at all. I unfortunately would recommend you stay in a major medical plan that has more upside to it and more coverage, even with those horrible deductibles. I hate to say it. I hope there's something better for you in the next year or two. We will continue to improve this plan. And maybe I shouldn't say this, but one thing we're going to do next year, once we have enough people on these plans, we could say, okay, how about a gap plan on top of this? What if we could layer on a gap plan which would pay $10, $15, $20, $25,000 on top of this plan, so that if you did have a major blowout, you had this plan in place, which in plan 4 covers $38,000 in hospital and intensive care and $10,000 in accident, surgery benefits, and so on. What if you had more than that? And then you'd really have that security blanket. So that is something we're looking at. Certainly not in, not in the cards this year, but you can see the coverage here. And I specifically chose plan 4 here. So we break down our plans from the most cost-effective, plan 1, all the way up to plan 4, which is the most robust coverage. That's the one Cindy's on, and she's still saving $500 a month. And I show this because I'm a former mortgage guy, right? And when I had, and I hope you'll appreciate this, I'm obviously a real estate agent now, but when I was in mortgage and people came to me for a mortgage, I would always hedge the rate. I would always be transparent. I would always tell them, and they'd go down the street to some other guy, hey, I could save 25 cents on closing costs. And, I'd be like, hey, guess what? There's going to be a surprise at closing. So we don't want any surprises here. So what I wanted to do here was show you plan 4, which is the richest plan, the highest premium, rather than show you, hey, you can get into this for $100 a month, right? I wanted to show you, the real deal. What most of you will probably want will be plan 3 or plan 4. But this is kind of a breakdown here. It's been up, slide's been up for a while, so you've had plenty of time to look at.
Yeah, we actually have a question about plan 4, and it's one that I had for you too. So I think it's an important one to answer. Kim's asking, the plan 4 highlights on the screen mean that it's what would be paid out. Example, $15,000 for intensive care. That very likely would not even cover one day if I was really in trouble. So let's talk to that, because $4,000 for surgery is also one that got my eye. I just went through breast cancer surgery with my mom. It's a lot more than that. So how does that work? If is this really all it is? And then if so, what would someone do if they were concerned that they might have much higher costs than this?
Yeah, it's a question we get all the time. So these are highlights, first of all. So these are some of the highlights. This is not the full breakdown of everything that's covered. So a couple things. Keep in mind that we code our payments as the hospitals and the clinics do. So it's line by line. So when someone says, I had a surgery and it was $10,000, well, that was a little bit of hospital benefit, maybe a little bit of intensive care benefit, maybe a lot of accident benefit, a surgery benefit, anesthesia benefit, and other stuff that combined equaled that bill. So these are breaking them down line by line. So that's the first thing there. In most cases, is it going to cover everything in a major issue like that? And the answer is no. It probably won't, especially if you're out of network. If you're in network, there's a much greater chance that obviously Turnian has negotiated a $250 bill instead of a $2,500 bill for an MRI or so on. So in most cases, will it cover it? It's just going to depend on what happens, the extent of it, et cetera. But I would say what we've done is, self-insure to a certain degree and shop around. If we need something done, call them up and find out, hey, what are you going to charge for this? Oh, it's X. Okay, great. Well, I'm not going to go see Marcus Welby at General Hospital for that. I'm going to go down the street and save $500 because that's what's in my plan. So if you know of something upcoming, call Turnian customer service, say, hey, is this covered? What's covered? How much is going to pay? And they'll be straight with you.
Gotcha. So Darla has, I think, again, another question probably a lot of you have. She said, this sounds too good to be true. How much out of pocket would I actually have to expect to pay per year? And I just actually one follow up on what you were just talking about too. And I think, Cindy, you got to the same place that many on the call may be getting to, which is, so let's say that, I'm just going to use a round number. Let's say that the surgery actually cost $10,000 and not $4,000, just for argument's sake, right? And that's maybe not a real number, just for argument's sake.
Yep.
What we have to account for when there's no deductible, which is what this has, is number one, that $7,500 right off the bat, no matter what goes on, you have to pay. And like in Cindy's case, you said it was about $900 a month roughly for your premium, right? That's right. What, $10,000 or $11,000 a year that you may or may not use, and you may do that for 25 years before you have that one surgery that costs you $10,000, right?
Well, and also most major medical plans that I found charge, you have a huge deductible of, mine was $5,500 to $7,500 plus an 80/20 after that. So I still had to pay 20% plus my premium plus nothing was even actually paid until I paid that first I know the last plan I had a year ago before I changed was 7,500. The one before that was 5,500 deductible plus 80/20 then after the deductible was met.
Okay, here's another one for you, Brian. Can this plan be used as a secondary or a supplemental plan? Or is it meant to be your primary plan?
You will get into trouble with your primary plan if you add this on, because there's a question in those where it asks, do you have any other coverage? And if you lie on that, you're in trouble. So no.
Got it. Okay. So there's a whole bunch of questions coming in here, and I'm going to let you talk for a little while, Brian, because in fact, I think a lot of you guys, first of all, a lot of you are asking, Pat and Kevin asked, will we get a link to this? Yes, I'm going to be sending you a recording of this. So if you want to share it with your family or your brokerage or your fellow agents or whoever, feel free to do that. And then we'll give you the contact information. So a lot of the specific questions, Brian is probably better suited to answer one-on-one. Someone asked about heart surgery and things like that. There's a lot of different scenarios here when we talk about our individual health. So, well, why don't you keep going through it a little bit, and then I'll come back and see if there's some more questions that we can answer, because there's a lot of great questions coming in.
Okay, sounds good. Yeah, plan 4, you talk about the annual premium outlay. So to answer that question, we can just do the math here. This is very similar to the plan that Cindy's on. This one includes wellness. It's a newer plan. So it's $360 a month, give or take a couple bucks here or there. So you do the math on that, and you're out of pocket, what, $4,300 a year, give or take. So that's plan 4. That's the most rich, robust, dare I say, expensive plan we have at $360 a month. And so this is kind of the sweet spot for a lot of individuals who a spouse may be covered, but they're not, or you're an independent entrepreneur out there. This is a great plan for you. If you want to add kids, basically a little more cost here, $705 a month. Again, that's plan 4. You can add dental, which is more important with kids, for $42 a month, and family plans. And that may look like a big number if you don't have a family. Our plan was close to $2,000. Now it's almost half that. You can add the dental for $67. Now, for folks who want to trim that outlay back a little bit, plan 3, not quite as much benefit, certainly, but a good prescription plan as well is only $740 a month. So you can save $350, $400 there. So I threw this in because this is where I wanted to really spark a lot of the questions, and I know they're rolling in. So if we don't get to them, I'll put up my email, my contact info here in a bit. It's info@youity.com, YOUITY.com, or Brian@youity.com. I want to speak to you directly. I'm not going to send you off to somebody else. I want to talk to you and find out what's going on. So a lot of the questions here, I kind of summarized this, and we can bring Cindy and Marilyn back to talk about it. But a lot of folks have questions on the limits on the coverage. That's in our plan document. It varies widely depending on which plan you're in. Again, plan 1 is extremely basic. That'd be a good plan for maybe a single millennial in their late 20s or early 30s. Maybe not the best plan for someone in their 50s or 60s. I mentioned who this doesn't work for. Again, I want to reiterate, these are not major medical plans. These are not what we've talked about, the Anthems, the Kaisers, the Regents with massive deductibles, and even those plans don't cover everything. Our plans with no deductibles, and I appreciate Marilyn pointing that out, because that is a big number when you're dealing with a major medical issue. So not major medical, these fall under what's called limited benefit. And that's why we are able to control cost. And that is the big thing we are trying to accomplish. So what kind of happens in this feedback loop is, after everybody hears this and like, oh, this is great, but I really want that. And to get that, you got to pay for it, right? And so if you are more comfortable staying with, the big name plans out there, the Cignas, United Healthcares, et cetera, by all means do so. It's going to cost more. The in-network question, I think we addressed that. Prescriptions, we addressed that. Annual wellness is built into the new plan we just rolled out here. And one question that we got to address here is this Irs mandate. I was unaware that there's still a lot of questions and concerns out there about this fine that if you don't have health insurance, you will be fined. And that is no longer the case. That was repealed with the Tax Act at the end of 2017, which wiped that out. So don't worry, if you don't have coverage now, you won't get fined. And if you take one of our plans, you are in good standing. So that's nothing to worry about anymore for anyone in our industry. Any other questions?
Oh, we got tons. Here's one for you. This one's a little bit more technical, but actually there's a couple from the association side. So 3 that I've seen. One was, is there a list of associations that are offering it that we folks can get access to? Number 2 is there a cost to the association if they want to become the person that the group that offers it? I'll get you those 2, and then I'll ask you the third one in a sec.
Okay. As far as a list, we on our side have identified about 50 of the bigger associations around the country, but we are open to all associations, and the caveat being it's within the 36 states that will allow us to do that. For whatever reason, a lot of it's political with insurance. Some of the states are much more strict when it comes to this, and you know this if you live in New York, New Jersey, New Hampshire, Connecticut, particularly the Northeast, very, very difficult to get stuff done. So I hope that answers that piece of the question. And as far as, I think part 2 was, can I go in there and
Is there a cost to the association if they want to offer this?
No, there's no cost. No, honestly, I'd never even considered that. So no, there's no cost. No.
So association people, don't remind him that he might charge you something. Okay, Evian has a very interesting question, and I don't know the backstory, you probably do. How does this interact with the pending case with the U.S. Supreme Court on the Affordable Care Act and the pending appellate decision on the rule challenge to the Department of Labor rule allowing associations to offer health plans? You probably know a lot more about that than any of us.
Now, are you an attorney or a real estate agent?
This is someone coming from an association who sounds like they're interested in trying to offer this, but they want to be sure they're compliant, of course.
Yeah, so to answer that question, who knows what's going to happen with that, right? We don't know. Okay. But our plans are okay. They're fine. They're approved. And again, insurance being regulated on a state-by-state basis is why, if I just may say, this has become such a convoluted mess, right? Is that you're attempting again to push the square peg through the round hole on a national level with national things that, listen, insurance is not underwritten nationally. It's underwritten on pools of people who are in specific groups, right? That's how they limit their benefits and their coverage and everything. So it's kind of to me, it's kind of basic to understand that. So as far as the political and the, is that what will happen? I have no idea, but I do know that with what we talked about, with Turney and Axis yesterday, I had a big call with them because, this continues to evolve. And I will tell you that for them, dare I say, it's kind of the best scenario, because when they get an association bylaws and paperwork and marketing plan and, the roster, obviously, that's truly a group, right? And in states, the 36 states that are friendly to that realize that. So that for them is really crystal clear versus me, quite honestly, saying, hey, so here's a brokerage in Texas, and here's one in Florida, and here's one in Ohio, and here's one in, and because that's what we're doing now, right? And so they're assuming a lot more risk by spreading out, in 43 states than they are about zeroing in on one. So kind of a long-winded answer there. I hope it sort of addressed your question, but okay. We're good. And so there's not going to be any, issue there. And if you want to talk to the attorney and legal side, I got plenty of attorneys that we can talk to reassure you about that. So.
All right, so we're getting still a bunch of questions. I think maybe if you can give them a crystal clear answer on this. I think if I remember right, the NAR data says that something like 80% of brokerages have 2 agents or less in them. So they don't make up the 5-person rule, but yet there's a lot of them, and I think there's a fair number on the call. And there's individual agents that would love to get this coverage. Lou, as an example, doesn't have any coverage, and he's dying to find a way to do this, I think. So if you are from a brokerage that has less than 5 agents, and or you're an individual agent who would really like to see this come to, into your brokerage or into your market, how would they do that? If they wanted to create their own group, how would they do that?
Okay, here's the easiest way to do this. So I'll just cut to the chase.
Yeah.
Go to your local real estate association, tell them about this, show them this video. Glenn told me it would probably post in about a week. Hopefully we can get it up sooner because there's obviously a huge demand for this.
Right.
Get this information to your local or regional real estate association. I know it depends on where you're at. I had North Dakota reached out to me the other day. Obviously we're working with a lot of the bigger associations right now. Get to that CEO, decision maker, whoever's running the show there, and tell them about this. Get them in touch, and literally we need about 5 documents from them, a roster, and then about 3 weeks later, give or take, of underwriting, we have a group ID for that association, and then every individual that's in that association is allowed to sign up. So that's the easiest way to do it versus the small brokerage model. As you're totally correct, a little more of a challenge.
Okay. Are these cost sharing plans rather than health insurance? I hear Christian health plans. I have no idea what that is. Advertised on the radio. Is this similar to those plans?
Not even close. So thank you for the question. Could not be anything further from those type of plans. Those were the plans I referred to earlier as supplemental plans, and a lot of gimmicks. Hey, we're all of this faith or whatever it may be, and we're going to pool our money together, and if somebody gets sick, all that kind of stuff. So those are supplemental plans. They in many cases don't cover a whole lot. So if a meteor shower happens on a Tuesday and you take a direct hit, you might be covered. If it was Thursday, you might not be. And I'm kind of tongue in cheek about that, but that's kind of how those things work. So
this is different. Zion, David in Texas had the same question. He's part of one called Zion Health. It's a cost share. So this is not the same thing.
Nope.
Okay, that's helpful. Okay, let me see. We got so many in here.
Can I just say something real quick on that? Those are called health. I think they might be referring to health co-ops. I checked into those too, and they're less expensive than the major med, but more expensive than this. And they are they cover things, but everything has to be approved by the co-op. So every time you do, it's kind of complicated. I checked into it and wasn't real comfortable with it, but I did check into 2 or 3 different health co-ops. Some were religion ones, some were other community. There's one here in the greater Milwaukee area, just a health co-op, but you have to be real careful with those.
Gotcha. And Diane wants to know, is there coverage for Medicare as part of this?
When you hit that point, Medicare, Medicaid, you time out here. You don't need this. So that's when you look at, and I'm not an expert on that, but that's where the Medicare supplement stuff comes in. That's a whole different world.
Okay, Brad asked a question while we didn't want to get technical, but these guys are clearly well educated on insurance, so great for answering these questions. Is this an indemnity plan?
No.
Brad's asking. No, it is not. Okay.
So in other words, you spend money on something, we indemnify you. The answer is no. You're paying premium, so at the end of the year, obviously, if you don't use it, it's like insurance. You're not getting it back to you. So these are not indemnity plans.
And Terrence has another good question. Do you have negotiated rates with hospitals, like negotiated pricing, which is significantly less than the hospital cash rates? And then do your benefits apply to that negotiated lower price, or is it the full cash rate price?
That's a tricky question. So I would, having paid cash in many instances, and I'm not a attorney and insider here, but certainly it's based on that model where, as I mentioned, the carrier is going to pay the clinic, the provider, the doctor within 30 days, 80% of the time. There's no deductible, so on and so forth. Oh, okay, great. Well, yeah, on that network, we'll take $150 for a broken arm. If it's another guy, we're charging $500. So what they've negotiated, I don't have specifics on the dollar figures, but I do know that in that network, when it's access attorney and they know they're getting paid, And so I'm sure that they've negotiated, lower payouts. That's why we're paying lower premiums. So
Got
that's
it. Okay.
that's the whole gist of it. Yeah.
So Rena and Mel wanted to know which 36 states are included or which states are excluded. Is that anywhere on your website that they can look that up?
I don't have that yet. This just came through yesterday. We are approved in 43 states, so I can
Okay.
tell you that's as of right now. So
Okay.
I could start there by naming the 7 that overall we're not approved in, and then I'll have the 36. Hopefully, my rep said he'd get back to me today with that. So as of today, for just even trying to place this, not approved, of course, in New York and New Jersey, which are impossible. Connecticut and New Hampshire. On the West Coast, Colorado, Washington State, and Idaho, but we're working close with Idaho and fingers crossed on Colorado. So in New York, I think maybe, dare I say next year, but it's a tough go there. So.
Okay, here's a different one from Cindy. If UID, is UID an association we join, or do we have to join an association, then contact UID for insurance enrollment?
So I am a brokerage. So UID is an S corp based in Washington, licensed in all these states. So and I, as an individual producer, am also in the same category there. So I'm the brokerage, the broker of record. I'm the guy, the crazy guy who decided to try and tackle this 2 years ago, and here we are. So I am not the carrier, and I'm not the association. So I'm the one that essentially the carrier offers the products through exclusively. So me and my team, we're growing. So yes.
And I think I know the model that, because I looked at that before too. There are groups that you join this association, and then that association, and that one always seemed a little sketchy to me, to be honest with you. But I know what you're talking about, because I looked at that a few years ago myself.
And if I may, that is a good point, because that is why, to give you a real good download on why we've all been beating our heads against the curb over the last 5 or 6 years with this in this profession, is just because of that. In many states, the insurance commissioner, believe it or not, they don't want to go this route because they think, well, if we do this, then everybody will become a realtor or everybody will become a plumber, right? And that's the thinking, really. That's what's behind this. So that's what's prevented this up to this point. So yeah, the whole association thing, in some states you just don't even want to bring that word up. Obviously, 14 of them. So yeah.
So brokers would like it if everyone wanted to become a realtor. I'm not sure all the realtors would like it if everyone wanted to become a realtor, but if they were good at their job, why not, right?
Yeah.
So here's just an example. David says, I'm paying $390 a month for really basic coverage and a $5,000 annual deductible. I just need to find out if my particular association is signed up. So I think you need to share that list real quick, and I would send out regular updates as new people get added, because it sounds like that could be a really great way for everyone on the call to be able to take advantage of this. So why don't you put your contact information up? We're hitting the top of the hour, so everybody knows where to go. Oh yeah, actually, maybe go through this real quick, and then let's do your contact information. And again, you'll see, and there's a lot of people that are asking questions here. I think the best thing probably to get your specific answer is to contact Brian directly. He can tell you more, but let's go through this real quick.
You bet. Yeah, these are for the brokerages out there. I just cannot stress what I'm really most proud of in putting this together was how much we simplified it. That's been a barrier for brokerage owners, franchise owners. So minimum of 5, that. It's a 1-page request for coverage. It is a roster. We don't need personal information, just names, emails, gender, that's about it. An ACH form so we can pay you the premium and then you remit that every month. There's no record keeping there. Should take 10 or 15 minutes. There's no liability, no other issues, no contract, there's no fee. Very, very easy to implement this. People always have a few questions. We're trying to streamline that, but you don't have to worry about premium collection. We collect the premium, and I thought groups would want to do that so that they could retain people, but it's too much of a headache. So if you are in a group where you want to do that, we can do that, but most have chosen not to do that. So we collect the premium, we remit that back in a lump sum, and then the brokerage pays access and turn-in every month. More questions here I just threw on at the end. We've addressed the supplemental coverage a couple times. No, it's not. Open enrollment is November 15th through December 15th. I have a feeling we're going to be inundated here, especially after this call, and that we will likely end up extending that through January 15th. So the December 15th cutoff would be for coverage January 1, and correspondingly January 15th for February 1 pickup. It takes turn-in and access, again, they're good at managing expectations, but going to have to give them 3-4 weeks to underwrite. Once we have a few of the bigger associations through, I think it's going to go a little quicker. So that's good news for all of us, but I'd love to have everybody jump on this like today or this week and get as many of them into underwriting and get the approvals out, because then we have a group ID and we can't open up our online portal and do the orientation for your association or your brokerage group until we have that group ID and everything ready to roll. So that's really kind of, if you back time from November 15th, we got a couple weeks here to get things submitted, but I know we love deadlines in real estate. So, I mean, why not push it to the very end? So there you go. Yeah.
So Cindy, just a question for you, because none of us have any time either. How easy was it for you as an individual to sign up for the service?
Well, I had to get my brokerage to sign up, so I presented it to them, my managing broker, and then Dana, who is the one who actually gets all the stuff done for my managing broker. They worked with Brian. We had a couple. I think you came to a Zoom meeting with my office, Brian. It took a little bit. I think I started talking to Brian in April. I had coverage starting July 1st, but no one here had heard of it. And I did the research, and then I had to communicate to get my broker to sign up. And I pushed it with them as a huge recruiting benefit for our office.
Absolutely. And there's a lot of people that have asked if there's a recording for this. So I think just like Cindy did, take this recording and just walk, sit with your broker and show them what we're talking about here. If you guys think this is valuable, there's no cost to the brokerage. It sounds like it's very simple for the brokerage. And if I agree with you, Cindy, it's a great way, because everybody in the world struggles with this topic, right? It doesn't matter who your insurance provider is. You wish that you had a different insurance provider pretty much, except for this one that seems to be settling in. So I would definitely just take this. And again, Brian, put your contact information up on the screen. So if people have questions, or if you want to send the broker directly to Brian, it's Brian at you. Is that I think it's on the next slide.
Yeah, I'll just say one more thing here. Thank you, first of all, to Cindy for really, kudos to you for staying on it, because it took about 3 weeks for Dana and I to actually connect. And then, we went through all that. So it was a little longer ramp up there, but that's how it happens is, Cindy staying on top of it. And what we've done now is we've streamlined our orientation and our online setup. So everything's done online, on demand. And I want to point out that we have customer service is so important. Turn-in has 2 full service customer service centers, one in the Midwest, one in Scottsdale, with real people in America. So when you call, you have a question, they are there to answer it during business hours. That is very, very important. And here is my contact info. Info is the catch-all. I see that. Our whole team sees it. Email me directly, brian@uid.com. Either way, I'll get it. And I have a feeling there's going to be a lot of emails, so I'm going to be on it. I've left the afternoon and tomorrow open, so it may take me a little bit to get back to you, so I want to manage that expectation. But I just can't reiterate enough how thankful I am for the opportunity. Get kind of emotional because it impacts a lot of people. So thank you.
It sure does. Well, thank you, Brian, and thanks for doing all this extra work, because I know right around this time every year, every one of us, just like Cindy did, goes, what the heck? And we all try to think about, we should go do the research. And then you get on the call. How many of you have this problem? You get on with the insurance company and you get on hold for about 45 minutes. I think they really don't want you to call and ask about new questions, or if they do, they're not supporting their customers in the way they should. I know that's happened to me more than once. So Brian, thank you for doing all that hard work on all of our behalfs. We all have good intentions, but we never get there. So I appreciate that. And I hope that this will help at least a few of you on the call, if not many more. So again, info@UID or Brian@UID, contact him and he'll help you. And again, everybody on the call will get the recording. So I got many calls on that. Feel free to share that with whoever that you see fit. And again, if you have more questions than what we've talked about today, Brian is a great one. And again, many of you had individual questions. I would reach out to Brian at UIT about, pre-existing conditions and particular types of illnesses and particular types of coverage. He can answer all of those questions for you. Okay, so anybody, thank you so much. I really, really appreciate all of your time. Cindy, thanks for being here with the voice of reality, the one that represents all of us, that we all struggle with this crazy stuff. This was awesome, and more to come, but good luck, everybody. I hope this will help you out. Have a great day.
Thanks, everybody.